Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Catton. Jumping to the charts on this February 9th, what a wild Thursday it was. We were able to profit tremendously in the live day trading room. But in terms of the price action today, indices were down, pretty much a broad market sell-off. Most stocks finished negative today, despite them gapping up and starting the intraday rally on a high note. So here's the market session. Markets this morning closed down here, gapped up. It looked bullish. It looked as if you were going to attack this gap fill, and then the sell program just started coming in. And if you notice that pattern on the S&P, notice the intraday move on the DXY, the Dixie, a big rally to the upside. So clearly the markets are heavily correlated to the dollar now that it's in this critical 103 tightening range. Anything higher than this and the markets will continue to sell if the Dixie continues to move up. So looking at the daily chart on the Dixie, you got a big break here. You tested this key support and you bounced off of it tremendously with power. You can see that the Dixie's putting in this beautiful bull flag. 1 or 2 more days and this would be a perfect consolidation pattern above this area, and it would be poised to break through resistance. You can notice resistance is this white trend line connecting your main trend. If you get above that, then it likely means you're going to attack the 105.68 area and potentially higher. So you have a couple of key points of resistance, and the fact that you're consolidating it right underneath that potential first level of resistance likely means that if you get a couple more days of bullish price action, you will see the dollar continue to creep up. Notice how you're still bubbling up on that 50 daily moving average. It is starting to potentially weaken the more and more days that you test that critical level. Now, we have to ask ourselves, why is the dollar so strong? Well, the bond market is finally listening to the Fed and realizing that, okay, maybe it is higher for longer in the interest rate environment. We've prepped you since we got this first initial reversal off of that very hot jobs number. We can't forget that. And then since then we've gapped up higher, putting in bullish consolidation today. You almost had a technical breakout in yields today. You actually did have a technical breakout on the 2-hour chart, or on the hourly chart, by closing above and confirming. So with this shorter term confirmation breakout, you likely will get to see continuation in higher yields. And this certainly would put additional pressure on the markets. And what's interesting to think about this indices sell-off, if we look at the IWM has been the leading sector, basically breaking out of this clear downsloping little trend line over here. And now you've had a pretty massive fall from grace. We're talking about a 199 pivot high all the way down to 189. That's shaving off almost $11 off the IWM. So small caps have been annihilated in the recent sessions. And the importance of identifying this level is that you're still technically holding above this breakout zone. So this is really the level for the bulls that they want to hold. If for some reason we slice through and close below that, that's going to be short-term bearish for the small caps, and it likely means that the S&P will continue to roll over. Notice how the S&P is basically closed under that first support pivot. That's a bearish short-term signal. Now, it could have a chance to recapture that level tomorrow, but if you get a close below this pivot, you likely get sent down to the low range of this wedge pattern. So notice how this wedge pattern now is a new trading zone that we could potentially chop in until you have a bigger move in either direction. But realistically, tomorrow we're on watch. How I think the price action is going to go is potentially, if we look at the intraday chart, based off of some of my market experience, there's a couple scenarios that could play out. One thing that I'm expecting is if we get a gap down in the morning where price action sells and bleeds, there's some decent support in many stocks around, the certain level that I'll have to calculate and identify for individual names. But the market could gap down and then reverse and just close right above this key white trend line to basically confuse the bulls and the bears, because this is the level that we need to watch, is this white trend line. So if we get an additional sell day tomorrow on a gap down, look to potentially cover some shorts, buy some longs. If for some reason you get a gap up again, notice the theme in terms of gap ups have been so far, you've basically rallied up, faded, you gapped up here, faded. So you're seeing that price action in many of the stocks, and it's certainly something to note. If you look at the Qs, so tech's been holding up a little bit better because Apple hasn't really put in a sell signal. It was really the small caps that started pulling this market down. But notice how the Qs, let me just get rid of that tool. Notice how the Qs actually came down, hit this first gap fill support, and bounced off of it and closing above. So that's the level on the Qs that you want to see tech hold. If you lose that level, you will have some additional support at this red pivot. But if you lose that pivot, then it's likely going to see at least a decline to the 278 in the Qs. Now, there's a lot of things that we also need to discuss. We'll take a look at oil. I'll touch base on a couple individual stocks as well in another video, but oil really hasn't confirmed a recapture of this trend line. You still have potentially this breakdown in oil confirming. Now we have to keep in mind that the Saudis are likely not going to want to keep the oil from going past 70 because that's the implied range that Biden wants to refill the SPR. So the Saudis do not want to see Biden refill that SPR at 70s because it means that Biden has made an excellent trade, basically shorting the oil market by dumping oil when it was at 120. And if he's able to refill below 70, that's pretty much a massive gain. If you think about how much of a net gain that would be if he was to refill at 70, you're talking about a 30 to 46% spread that Biden would have made as a trade. So obviously there's a lot of price action in oil. There is support at the 70 mark. I'm still in the camp that we still see a move down to about 65. I do think we're going to break this pivot and head a little bit lower, but the $65 range is on watch. And then obviously if we have to still watch this larger topping formation that is in play on the weekly time frame. I'll touch base on that in the weekly summary at the end of the week, but needless to say, this pattern has not triggered yet, so do not try to front run oil. We just have to be mindful that it's lurking, but it has not triggered. Let's take a look at the Widowmaker natural gas. So if we pull up the end natural gas chart, natural gas has had yet again another wild price action, but it did close positive on the session. Short-term natural gas is still holding this key technical support. It's so oversold on the chart that I really have to zoom in just to really get a good picture of what the price action is doing. But you're clearly in this range of support. Notice how you tried breaking above it. You had a massive reversal, but you're still technically holding this low. This is the low to beat. As long as you still technically hold that, natural gas has a potential to bounce. But notice how natural gas has been trying to bounce, getting sold into, trying to bounce, getting sold into, but you still are technically making a short term from the low here series of higher highs. So, higher lows, higher low, higher low, higher low, higher low. We basically need to keep this trend going. If natural gas loses this trend of higher lows, then it's extremely vulnerable to basically making new lows on the session. And if we start to get more of this type of price action on the daily for another week or two, where natural gas really doesn't make a meaningful breakout or attempt, and we get more bearish consolidation, it would be wise to potentially hedge your positions with some puts to potentially see natural gas flush down. I do have a level of 178 on natural gas that it could go down to. So obviously if it were to flush down there, not saying it will, but 178 is still a 28% drop from this area that it could potentially. Now that is pattern pending. That downside is basically assuming and running a pattern that we have not achieved yet. So I'm not saying that downside is on the table yet. Obviously things could flush lower. It's still technically oversold, still holding support. I'm still long, but you have to be aware of potential patterns playing out, over the next 1 week, 2 weeks, and then being able to adjust and pivot as a trader is key, because right now my bias is long. I want to see natural gas bounce, but it's not what I want to see. It's what I seeing. So we have to look at all the scenarios for natural gas. And right now it's not catching a bid with this market. If we take a look at gold as well, gold had a really intriguing day. Basically, I want to we can look at the daily chart over here on gold, but a few things to note on gold. Gold tried rallying throughout the day. Let me just take you to the intraday chart because gold's a really fascinating price action. Gold tried seizing that dollar weakness. Notice how intraday you made a high right off that initial bear flag top end of the range, and you reversed completely, engulfing all of those gains in a matter of a few 10-minute candles, and gold actually finally broke down out of this range. So if we look on the 4-hour intraday chart, I think it's really telling to know that on the 4-hour chart, you engulfed basically multiple hours and days of price action in one 4-hour candle. On gold, this is serious. Gold basically confirmed the break of this trend line, and then you confirmed with an additional 4-hour candle. Gold likely heads down to this first target of 1827 and then eventually 1788, where you will have decent support with this massive pivot bounce, this breakdown sell-off, this pivot high and breakdown, these pivot highs, this consolidation chop before you break out. So we're coming down on gold into the big level where it'll be curious to see if gold bulls can hold this technical breakout that it has had, and we'll see if it can make new highs. But gold is looking very, very weak, which means that it's likely the dollar continues to see strength. The next big level, now that you've triggered this bear flag and it is on watch, you want to see gold basically break this level if you're a bear. If you're a bull, you do not want to see gold break this level. So right now it's teetering on the brink of basically breaking it, but it has not broke it. You've pierced it twice on many hourly candles and you're still technically holding it, but it's looking very, very susceptible to a breakdown. Yes, it certainly does. If we take a look at Bitcoin, BTC, USDT, lots of action in the crypto space. 4-hour chart, look at this broadening formation, break, and you confirmed the break to the downside. Now you are at short-term technical support. Let me flip on the daily chart. Basically, we're looking now for a daily chart breakdown. This was a breakdown that was telegraphed. We informed you last night, all of our members. We made a special exclusive video right around, basically around 9 or 10 p.m. last night, exclusive analysis because we saw crypto breaking down. I did not know that the news was going to come out from the SEC fining Kraken, basically going after the whole staking protocol on many of platforms, Kraken being one of the first, as well as Coinbase, because Coinbase hasn't really adjusted yet. So the fact that now staking has been eliminated in the crypto sector, what that means is that it reduces a lot of the extra liquidity that's floating around in the market, in the crypto market, and it puts a tighter constraint on the leverage and the yield that people can earn. And if there's constraints on the leverage, it means people can take on less debt, and therefore there's going to be a lot less liquidity in this market. And one thing about markets is that they thrive on liquidity and they fail when liquidity is weak. So let's continue to watch Bitcoin now in the larger timeframes for a break. So far, you've had a clinical textbook break of this broadening formation. You're hitting a little bit of these pivot tops now. The big level on Bitcoin is you do not want to lose this 19,000. If you lose this 19,000, Bitcoin can still fall all the way down here, consolidate, and then try to build a base to move up. But if you break this 19,000, Bitcoin's going to be going to the low end of this range at 13,000, and that would make a new low in the cycle. But nonetheless, there's going to be tradable bounces. We want to see volatility increase. Right now, in terms of Bitcoin's intraday price action, if you look on the hourly chart, Bitcoin's putting in bearish consolidation. If you look on the 20-minute, it's all bearish. It's bearish every which way you look at it. Bitcoin is putting in bearish consolidation. We can actually also pull up Ethereum. So ETH USDT, basically for ETH, look at this wedge pattern break. You had your flat top across acting as resistance, your support. You've now broken support. We're waiting for daily confirmation. The big level on ETH, if you lose this level on ETH, this 1510, ETH really doesn't have much support from 1510 all the way to 1322. So we're talking about a potential, 10 to 12% drop, 190 points off of ETH if we get a daily close below this level and we lose this 1500 support. So that's kind of my expectations for ETH. We are short crypto, so obviously we're expecting a decline. Nonetheless, crypto will have tradable balances, so hopefully we can secure some intraday action. With crypto weakening, there might be other sympathy plays that are shorting. You certainly saw Coinbase seeing exceptional weakness today. We were able to play that down minus 14%. So that's a massive drop on Coinbase, likely seeing this market top. If crypto loses more and more support, Coinbase is going to trade near the lows. You're also seeing massive weakness in MSTR. We shorted that, beautiful 12% gain already, closed it, booked it in basically a 4-day trade. But MSTR is now trading back at support. If you lose this technical level, then you're likely, again, similar trade back to 208, which is a pretty decent decline. So my expectations now for MSTR and how I'm going to trade it, if crypto like Bitcoin, let me just pull up the Bitcoin chart, starts to basically consolidate in a little bit of a sideways pattern here where it backs and fills, goes up and down for a couple days, then we could also look for sympathy consolidation in some of these equity stocks in the stock market like MSTR and Coinbase. If they put in sideways consolidation, then we can potentially short that bearish pattern down as well. And I do think that that is a potential play that we could do. Now, to sum things up in this video, basically, we're obviously net short. We had a stellar day, adding to positions and seeing them reverse significantly. But if you look at the SPY, what I'm expecting tomorrow, and if you look at the Qs are important because tech has been weak, and same with the IWM. IWM's been leading this decline. If we get any sort of gap down tomorrow, I'm going to be looking to cover some shorts, and then I'm going to be looking to pick up some key technical individual long stocks, which I'll be touching base in maybe the next previous video. But stay tuned for potentially an action-packed day. We're also waiting on China inflation CPI numbers that should be coming out later tonight. Japan's CPI and PPI came in lower than expected, so it's showing that Japan didn't really see any extra inflationary forces for the month of January, which is short-term positive for their report, because I think in the last 6 Japan CPI readings, you've had inflation uptick in terms of what the market forecasted. But nonetheless, Japan's not that important in terms of their inflation numbers. China is going to be more important because China reopening play is kind of the theme that a lot of people have ran with. And if that comes in higher than the market is expecting, inflationary, then it could mean that our CPI is likely to come in hotter than expected as well, which would obviously force yields up. And that's certainly what yields in the dollar market are signaling to us. On that note, be ready for tomorrow. We could get that gap down and then reversal. Typically, Fridays do like to close positives. You like to have a lot of short coverings on Fridays as well. So there's potentially a potential reversal that's in the cards, but we'll have to see what the market gives us and trade what is in front of us. On that note, take care, everybody, and we'll see you on the charts tomorrow.